2026 is here, and this year could bring some changes to mortgage payments for some Canadian homeowners. Here to give us a breakdown of what to expect is Frank Napolitano from Mortgage Brokers Ottawa. Good morning to you, Frank.
Good morning, and Happy New Year.
Happy New Year to you, too.
It's a big year. It's a big year.
Okay.
More mortgages mature in 2026 than ever in the history of Canadians.
Really?
So, again, look back to 2021 when so many Canadians were buying homes because they were working from home.
Yes.
And interest rates were at historic lows.
So
all of a sudden,
low.
so low that everybody decided to get into the housing market. And now those 5-year mortgages that are at 1.5, 1.7 are now maturing. So a lot of big decisions for a lot of Canadians this year.
Some people say we will probably never see those kind of low interest rates again in our lifetime.
Likely not.
Probably not.
I'm 63. It's only happened once, so likely not. I agree.
Okay, so what do we do here in 2026? We got some new things to look forward to.
Well, the mortgage stress test has been in effect since 2017, 2018. A couple of amendments have happened over the years, and one of the biggest ones is you have the option to be able to move your mortgage from one lender to another without having to qualify under the mortgage stress test.
That's right.
So that's a big, big key component for anyone making a decision, because you shouldn't be stuck with your existing lender if they're not offering you a competitive rate. And if you're worried about not qualifying because of the stress test, you don't have to worry about it, because you could move your mortgage to another lender without having to hike the rate by 2 percentage points, which is what we have to do when it's a mortgage stress test. But I want to make sure and clear that it's only if you move the mortgage the way it is. If you decide to do a refinance, then so if you decide to borrow more money on the equity, you've got to go through the stress test.
Okay, so you can shop around the mortgage that you have, your existing mortgage. You can shop it around and not have to worry about going, now I've got to go through this full stress test again. That is good to know.
It is good to know.
Okay.
That's good news.
Okay.
That's good news.
All right. Okay.
Interest rates.
Interest rates.
Boy, again, 5 years ago, 1.5, 1.6. Today, high threes, probably if you're renewing into a 5-year fixed. Mid to high threes if you're looking at an adjustable variable rate mortgage. What are interest rates supposed to do? Boy, that's everybody's. I mean, Bank of Canada came down 1 percentage point in 2025. Is the same thing going to happen in 26? Likely not. Is a quarter or 0.5% possible? Sure. But the markets are basically dictated by what happens in the world. Economic events change. Look at what happened this weekend. So anything can happen. So interest rates are, we don't know what they're going to do. My guess is that they're probably going to remain pretty stable, maybe a quarter to 0.5% down this year.
Okay. And can we say this, though? I mean, when we're talking about way back in 2021 and so on, the interest rates were historically low. So we kind of got spoiled thinking, well, 1.1, 2%. So 3 and 4% is not terribly high, really,
It's not horrible. 4% is not horrible, except for the cost of living is more expensive.
There you go.
And the price of a home is more expensive. That's the problem.
Okay.
Those are the problems today.
Okay.
So,
Okay. And next up?
Government housing policies. Again, both the provincial and the federal government introduced that HST rebate if a first-time home buyer buys a brand new build home. Hopefully that'll come into effect in February or March of this year. They're going to pass it, hopefully. Those are some. Again, the government's really talked about building not cheaper homes, but more affordable homes for first-time young Canadians and maybe some older Canadians, so that they can transition from their big homes to smaller homes and yet be able to put some equity in their pocket. So hopefully, fingers crossed, we'll be able to see some of that.
Can I quickly ask you about that, Frank? So for first-time home buyers who buy a brand new home, they could qualify to not pay that HST tax. What qualifies as a first-time home buyer? Like you've never bought a home before?
Good question.
Right?
It used to be just you never bought a home before. They've changed it recently, so if you've gone through a separation, you've got a separation agreement, that qualifies you.
Okay.
Or if you haven't owned a home for 4 or 5 calendar years, that also qualifies you, first-time home buyer.
Okay.
But again, hopefully we'll get more details as what qualifies there.
Okay. And finally, new in 2026.
Regulatory scrutiny.
Yeah.
We haven't seen a lot yet. I mean, they've talked about limiting mortgages to 4.5 times your income. So for someone to qualify for a mortgage, I think what they're trying to do is make it harder for people to buy multiple homes, so that there's more, because of the lack of houses that we've got out there. So I think that's the reason behind it. But we haven't seen much yet. But hopefully if anything, I mean, they need to make it easier for young Canadians to be able to have the dream of home ownership. And right now, a lot of young Canadians are worried that they'll never be able to own a home.
Okay, before we go, that's the question I want to ask you. You're looking at 2026 as far as home ownership is concerned. What are your thoughts on young Canadians looking at possibly getting into owning their own home? What are your thoughts on that?
Well, it's tough. For a single person, it's really tough, a single young Canadian. If it's two young Canadians with decent salaries, possibility is there. Rule of thumb, 4 to 4.5 times your annual salary is what you qualify on a mortgage. So with the average home, maybe $500,000 to $600,000 in Ottawa for a townhouse, you're looking at salaries of $125,000 to $150,000. So some can do it, some can't, but
Frank
it's
Napolitano,
not easy out there.
Thank you so much for your time this
Pleasure.
morning. Great to see you.
Pleasure.
Thank you so much. All right.